The week continues to be about risk sentiment and intense liquidation in the global equities market as worry around the outlook for global trade escalates. It seems China is more than happy to play the game as well right now, unwilling to bow to pressures from President Trump, coming back with its own statements that it has made adequate preparations to respond to the U.S. on any moves it makes. All of this comes at a time when the global economy is still trying to recover from the crisis of 2008, with tools to battle negative shocks, all but exhausted, leaving very little cushion to support fallout this time round. It's important to remember that the U.S. equity market has just come off another record high run in a move that has been unstoppable since it got going in 2009. This already leaves plenty of room for mean reversion and a healthy adjustment the other way without even needing to point to exhausted policy implications and negative shocks. But when we throw in these realities into the equation, things could get a lot uglier. The main takeaway right now is that we're in a world where the prospect of intensified liquidation in stocks and ramped up soft dollar policy from the U.S. administration are colliding and lead to a place where risk-correlated markets will be exposed and the U.S. dollar will be less attractive than it once was relative to its major currency cousins, with the euro, yen, pound, and Swiss franc all in position to absorb added inflow whether they like it or not. The pound has been the weakest of the major currencies on Thursday, once again stressing about lack of progress on inter-party Brexit talks, but we continue to see Brexit risk as less worrying and believe the pound to be an attractive play into dips off longer-term cyclical lows. Dollar selling against the major currencies was even more pronounced on Thursday in the aftermath of yet another soft inflation read, this time from U.S. producer prices. Looking ahead, Friday's calendar features the RBA statement on monetary policy, German trade, UK industrial production, GDP and trade, and US CPI. That's all for now.